Good evening, everyone. It is an absolute pleasure to welcome you all to this special session on Integrated Business Solution paper brought to you by Board of Studies Academic. We truly appreciate you taking the time to join us this evening. Unlike conventional subjects that focus primarily on rules, standards, regulations, calculations, the IBS paper invites you to step into the shoes of a decision maker. It challenges you to think beyond theoretical silos and engage with real dynamics of business where finance, strategy, operation, compliances, law, standards intersect. In today's session, we will be discussing the case study Van Private Limited in a comprehensive and integrated manner. This case is designed not merely to test calculations or computational ability, but to develop strategic thinking, analytical deep, and conceptual clarity across various domains. When Private Limited is diversified agri-business enterprise operating through dairy, animal feed, and crop protection divisions. Okay. Through this case, we will evaluate how a growing organization measures divisional performance, makes strategic expansion, manage financial risk, and complies with accounting and regulatory frameworks. A central theme of our discussion will be performance measurement. We will critically examine the ROI, that is return on investment, RI, residual income, in evaluating divisional efficiency or divisional performance. One of the most insightful questions in this case explores whether ROI may discourage managers from accepting profitable expansion projects, while RI aligns more closely with shareholder wealth maximization. We will carefully analyze this conflict and its implications. Further, we will extend our discussion to EVA, economic value added activity, as a refined performance measure of ROI and RI. The case also raises important taxation issues, especially whether certain income streams qualify as agriculture income or non-agriculture income, and resulting tax implications as well. We will also discuss principles governing such as classification and how incorrect treatment can significantly affect profitability and compliances. Another key area another key area will be improving operating profitability. Beyond numerical computation, we will analyze managerial levers like cost optimization, pricing strategy, assets turnover enhancement, working capital management, and operational efficiency. The objective is to understand profitability and how it can be improved in long run. From a finance perspective, the case includes forward cover based numerical problem. Okay, we will evaluate hedging alternatives, compute the effective outflow under forward cover, and link the discussion to relevant FEMA provisions. A significant accounting dimension of the case involves application of IND AS 41 on biological assets. Okay, we will discuss fair value measurement and recognition of gains of losses arising from changes in fair value, as well as financial statement presentation. We will also examine how such accounting treatments influence profitability and performance metrics such as ROI and RI. In addition to this, strategic expansion decisions such as launching new product lines or investing in additional capacity will be evaluated not only from a financial perspective but also from the standpoint strategic fit, risk assessment, and long-term sustainable decisions. The goal is to think like top managerial decision making. Overall, the session integrates concepts from advanced financial management, performance evaluation, direct taxation, financial reporting, as well as FEMA regulation. I encourage you to approach the case holistically, connect numbers with strategy, link accounting with economic substance, and evaluate decisions from a shareholder value perspective rather than considering in isolation. Today, we will walk through this case so that you gain clarity on how to approach such integrated MCQs and descriptive questions with structured reasoning. The case study is already available on students portal and I strongly encourage you to review it carefully. The session will be interactive, so feel free to ask any question either in English or in Hindi. You may speak directly or post your queries in your chat box. The last 15 minutes will be reserved for your general questions. We are fortunate to have CA Sumit sir, a prominent chartered accountant with over 20 years of professional experience in conducting statutory audit of large organizations, interpreting and applying Ind AS, business valuations, and risk assessment, and providing strategic guidance as an independent director at various board levels. His insights will bridge the gap between theoretical and practical knowledge. With that, let us begin today's session and explore this insightful case study. C.S. Smith, sir, over to you.
Thank you, Deepak sir, for the warm introduction. Good evening, fellow participants, future chartered accountants. Today we are going to discuss on a case study which is on a diversified business of agriculture. Before we get into the basics, so I'll give you a few updates. First, if you see the history of ICAI campus, so once you will become CAs, and most of you who will go for job will apply for campus. That's a preferred first choice. There used to a company come in India from Nigeria and Singapore and used to offer one of the highest packages ever in campus. And they were offering approx 76.5 lakhs per annum to a fresher CA. This was happened not only once, for many years, 7-8 years, this company used to come regularly to India and take them. The company name is Olam International Limited. Now, what does this Olam International does? So it is like a Ola or Uber of agriculture products. So this is a company who does a forward contract, buys agriculture in advance, and that's what they used to make money. And that's why they are one of the biggest companies in Africa and other parts of the world. Now, we all agree how much AI will come, whether it be it a chat GPT, Claude, Grok, Gemini, whatever you call it. Technology, whatever however it may remain, can it can it substitute the the agriculture farming? Yes, no, maybe. What is your view? Participants, what's your view? Any thoughts? We all, I think we all will agree this cannot be, this cannot be supplemented. We will all need food, agriculture, staple diet. So technology, AI cannot substitute certain things which are necessity for living. Now, this agriculture business all starts with a green revolution in India. By predominantly, India is one of the in India, agriculture used to be one of the biggest sector in terms of GDP. India agriculture stands third. First comes manufacturing, then first comes service sector, then manufacturing, and then agriculture in terms of contribution to GDP. But if we talk of but if we talk of in terms of contribution to employment, the people liveliness of people depending livelihood of people depending on agriculture, it is it is 40% above, which is a very significant in terms of India population. So this is how it works. Now let me start sharing the screen. Just give me a minute. So now this is a case study about a company when private limited, how it entered into a diversified agri-business, how it started. So this company was primarily into securing the crop protection. Now, many of you would be knowing who had little bit background of farming or aware of farming. Growing a crop is one thing, but what will happen if you grow a crop and do not take care of the crop? What if some insecticide, some insects comes in, will the entire crop go waste? Classic example is greenhouse farming. If anybody of you would be aware would know, if you plant a rose farming or a bell pepper farming, and if you have not taken proper care, you have not put proper pesticides or insecticides, one insect can damage the entire crop. Your entire investment of 20, 30 lakh of setting up a greenhouse will go for a toss just because you've not taken care. So that's why there is a business for crop protection. So you grow a crop, you plant a seed, do a farming, but then there are companies like National Fertilizers in India or various other companies who ensures that they produce insecticides or pesticides that you can spray over the crop. Now, if I put direct chemicals on the crop, will it be good enough for me to consume that crop, or it may lead to severe health issues? It will certainly lead to severe health issues if you have not taken good care of what kind of pesticides and insecticides you are using. and whether it is consumable for humans, and whether it is in the required required quantity. It should not be more than the desired quantity. So they are into the business of pesticides and insecticides, and they have done quite well because in 1960s we had green revolution in India. You all would have heard the name Harit Kranti if you would have ever read past history books. Harit Kranti was a revolution where everybody started growing vegetables or farming. India became a green country where the country which was used to be a feminine, not feminine country where it was not enough having enough foods during their distress time before pre-independence. Now, then we turned the situation and became one of the largest agriculture producers in the world. and then came the and then came the white revolution. You all would be aware of Dr. Korean of Amul, that Anand Cooperative Society, where the Amul was originated, and everybody started becoming a milk producer. And because of this, at one point of time, we were not having enough milk in India. To any idea which is the largest milk producer in the world? Any vague idea? Any thought anybody has? When we talk of largest milk producer, which is the largest milk producer in India? And you all will be surprised to know India is the largest milk producer in the world. That is, we produce approximately 240 million ton milk. 240 million ton. And the second in line is, any guesses who would be second in line after India? The second in line after India is US, United States, and we produce 240 million tons in a year. US is not even sorry, US is not even half of India's production. US production is 100 million a ton a year, and we are 240 million a ton. So you can see the gap between the first producer of the world and second in the world. It's a significant gap between these two countries. And then comes China, which is 45 million. So these are the broad ranges of how the milk has grown in India. Now, the interesting part is this 240 million tons. What do you think? Is it because of export oriented consumption, or it is because of Indian consumption driven? What's your thought? This significant growth of milk production is due to export driven, or it is due to consumption driven in India. Now, this is because of consumption driven in India. The kind of population we have and the kind of staple diet it is in, it's a mandatory intake in our houses, in all houses, milk. It has become a regular product. And that's why consumption wise, imagine 140 crore people even take 2 glasses of milk a day. You can imagine the kind of milk we are talking. Now, now we all will, you all will become professionals one day, and hopefully the day will come much faster. Once we become CAs, we just not only do audit and accounts or tax. When we work with a client, either as a job or as a consultant, client always expects more from us. Client expects when you are advising, you need to know the business much better, or at least equivalent to client, owner. Then only you can advise. So when we look into business, we need to advise, okay, If we are talking of milk business, we need to understand what are my peers, how the milk is coming. Now, take an example of milk. I'll give an example of milk production, that we are 240 million tons in the world. Now, when it comes to India, in India itself, which is the biggest state to produce largest milk, when it comes UP. Uttar Pradesh is the state which has the largest milk production. And then after UP, it is Rajasthan. UP is 15%, Rajasthan is 14%. That's the range they work. Now, I'm just giving you broad details to understand how the milk business works in. So if you go for any audit of a milk company or milk products, you have some idea. In terms of now we take the difference between India and US production is one of the prime reason is in US they don't take generally buffalo milks. In US they generally take extract milk from cow. In India, this is a reverse. Buffalo milk is extracted 50% out of the 240 million tons we are talking. Average 50% milk come from buffalo, 47% milk come from cow. Now, any idea this 3% milk is coming from where? Buffalo is giving 50%, cow is giving 47%. The remaining 3% comes from goats or camel, is whichever is preferred in certain parts of districts in India. So these are the ranges. Average milk extraction happens of cows is uh, uh, in country cow is approx 4 liters. Cross breed cows are approx 7 to 10 liters. Buffaloes somewhere around 8 to 10 liters. Now, this is in India, but in US, now the interesting part is in India, our maximum extraction of milk happens 10 liters a day from a cow. In US, it is 20 liters a day as an average. So you can see how different it is. It's because of the breed, it's because of the way you take care of the cows and animals, how you keep them, the kind of environment that makes a difference. In terms of milk, any idea which milk is expensive? Cow milk or buffalo milk? And why which milk is expensive? If anybody has any idea. So the buffalo milk is always expensive and it is due to considered higher fat. And in India, the mindset is if I give milk to my kid, it should be having high fat, so it become healthy and it becomes proteins and all that kind of mindset. So that's where it works in. This is a broad range of milks products and milk thing. So these guys knew that white revolution has come. White revolution is known for because of milk. It is white revolution where we surpassed the biggest production in the world. Now this company when is owned by Mr. Karnal Singh. He is the senior founder. Started in 1965. Initially, they were setting up only pesticides and insecticides. That was the only two things they were doing. Now, since they realized that now this is the product they have developed and they have done sufficient on it. Now, in future, because we are having a green revolution and a white revolution, he need to move to agriculture allied businesses. That has to be moved. That's he tried to move out. So he started having a crop production division in 1960s. Because of green revolution, a lot of products were coming, farming was happening. So he started a crop production division where he started producing pesticides and insecticides. Then white revolution came. And when the white revolution come, when the white revolution came, in the white revolution, he started into dairy farming. Now, before we go further into this, is agriculture income taxable or exempted in India? Any quick thoughts anybody has? Is agriculture income taxable or exempted in India? So I'm sure majority of you would be aware, and you are right that agriculture income in India is exempted. You don't pay tax on agriculture income in India. Now, if I enter into dairy farming business, that means where I buy 100 cows and give them, extract milk from them and start selling that milk. Will that come on under agriculture income? And that too, when I buy an agricultural land and I set up a farm on agricultural land, put all 100 cows on the agricultural land, extract their milk and send. Will this be exempted income? Yes, no, maybe. Any thoughts? Any idea anybody has? Anyone has any idea if agriculture income of dairy farming is exempted? So can we say it is exempted? It is not exempted. Even though even though you are growing it on an agricultural land, but this does not amount to agriculture income. It is not amount, it will be amounting to business income because you are not using agriculture as a prime thing. You are using cows, cattle, livestock, buffaloes to extract the milk. So it is not a agri income. It will be taxable. In terms of GST, there will be no GST on milk. If I'm selling a raw milk, there will be no GST. But what if I sell a strawberry milk? What will happen if I sell a strawberry milk? Will there be a GST? So if there is a processed milk, there will be a GST. It is like simple. If I sell a curd will have no GST. But if I sell a flavored yogurt, then it will be a GST. Okay. Now, then we have, since farming business has happened, dairy farming, there for another business came for animal feed business. Now, if I have 100 cows or anyone in India, if we are having a dairy farming white revolution will happen on based on white revolution will happen based on livestock. And to keep a livestock live, I will need animal feed, fodder, and that is we call chara. And I am sure many of you would be aware of the famous chara fodder scam in India. Anybody remembers the fodder scam in India, chara Ghotala, where one chief minister has to lose his position and his wife have to become chief minister. So this fodder business is a very big business because every animal would need it. So it is non-negotiable again. To run a business, to run a cattle, you need to have this fodder business. So they thought to enter into this business also. Okay. So in this vertical, their focus is on a crop protection, pesticides and insecticides. So this they are making in this verticals. In terms of dairy division, they were making on milk production and dairy products. So when we talk of products, so when you are doing a dairy, milk is the main product. Along with the milk, there could be multiple products you can grow depending on depending on how strong your brand value is. If you have a good brand value, you can leverage on this brand value. If you don't have a brand value, you will not be able to get the details. We'll discuss more on dairy production, how it can be enlarged. Then animal feeds. So I need to give compressed feeds, grains, legumes to animals depending on what kind of animals I have. If I have chicken, if I have hens, if I have cows, goats, buffaloes, each animal have a different food. So that part we need to take care. So these are the three businesses where they entered in. The vision of when is providing sustained value that nourish people and planet. Now, just to give you one updates, like one thought process now. Now, wherever you go in any conference, any meeting, any discussion, this term sustainability is the key term. In last 3 months, I traveled 4 countries, and in 4 countries, I attended 4 different conferences, whether it be it a ICAI conference or any other body conference outside India. In all the conferences, sustainability is one of the topics which is taken very, very religiously and seriously. Now, sustainability is something you need to sustain for a long term value without depleting your basic structure. So, their vision was provide sustained value that nourishes people and planet. Each verticals align with this vision. Their focus was on sustainable agriculture and rural development because if agriculture will generally happens in villages and rural area. So if we can focus on agriculture develop sustainability, rural development can come. Now, currently, their all business units operates in Punjab. Their headquarter is concentrated in Hoshiarpur. That's where all the decisions of 3 units take place. Now, since Mr. Karnal Singh has become quite aged and old, he has given his life. He has made this from scratch to such a place. Now this is managed by second generation leadership, Mr. Kunal, who is the son of the founder. He handles it. Profitability is no question now because of legacy of this company. They are having a lot of profitability, sustainability. So that's not an issue with them. Now they thought, let us focus on in 24-25, let us focus on assessing the division-wise performance. Then let us focus on intra-state operations, and then focus on can we do expansion outside Punjab? Now, to do expansion outside Punjab, I need to focus on how much my operations are going my intra-state. Intra-state means projection operations within Punjab only. Now, in terms of visible division of process, they got data and then they need to analyze. The reason for doing this exercise was they will be able to evaluate scalability of each division. Once I have decided that after 20-30 years in working in Punjab, how much I am able to grow a particular division and how much my returns are coming from that division, I will be able to I'll be able to take a call whether if I want to grow this across the globe, where should across India and other places, how to grow it. So this was very and see, I can make only decision. I can make only decision when I have clear data. To take any decision, if I don't have a proper data, we cannot work. That will be a damaging the organization. So if I need to take a choice how to grow outside India, I need to scalability of can be is evaluated only by seeing each division. Potential for regional and national outreach can happen by seeing the division performance. Consider vertical integration and value addition. Then they see how to integrate vertically or horizontally or diagonally and value addition to be done. Overall, they are having a success story aligning with India's agri revolutions. Three verticals had a strong foundation, and the new leadership that the young guy wanted to take further. So it is always said that if you got any legacy with you, especially for second generation people, if you got any legacy with you, the success only comes when you can extrapolate that legacy into much bigger and better number. If you sustain that, then it is okay. If my father has given me a company to run and I still maintaining at the same profit, then I've not done anything great. But if my father has given me a company that makes a profit of turnover of let's say 100 crores from last 5 years, and when it comes under my leadership, and I make from 100 crores to 300 crores or 500 crores, that's the real success which you can demonstrate that okay, I got something in my legacy, but I have not even kept it at same. I have grown it leaps and bounds. That's where the leadership counts. So now they decided, let us work each division independently. Let us evaluate each division. Once we evaluate each division, we'll get an idea how much it is growing, how much it is not growing. The performance metrics to decide whether which division is performing better are we need to consider two things. First, return on investment, ROI, and second, residual income. Then the reward should be based on individual performance. If the performance has done, division has done good, we'll reward them. Now, what is your view? Shall we reward people based on division, or shall I reward people based on organization performance? So let's say I have three divisions, division A, division B, division C. All three are different departments. A is done 100 crore profit, B is done 200 crore, C is done 300 crore. So shall I reward people based on respective divisions performance, or I should go on the basis of company's overall 600 crore performance? What is your view? Again, these are certain questions where there are no right or wrong answers. Why there are no right or wrong answers? These are not right or wrong answers because if you start thinking from an employee's point of view, let's say I'm working in a division and my manager is not able to perform well. I'm giving my 100% output. I'm giving my best shot. But my manager itself, who is working, is not an efficient guy. He's not able to take care of things. That's why it is getting deleted. I'm not getting good sales conversions happening. So because of a delay, because of a non-performance by manager, you cannot penalize me. So a staff will always ask for uh, on the basis of company. But imagine of a department which is grown very high. Then the staff of those department will say, we have performed outperformed from all other divisions, so we need to get extra reward. Otherwise, we would have done the same thing. And if you're giving on the basis of company, let us not work more. So these are certain issues which a firm organization need to give a deep thought and decide, because these kind of decisions impact a lot on employees' motivation. Now they decided that out of all head of expenses, all performance, 2% of each department revenue will be allocated towards head office expense. Because there are certain expenses done at a head office level which you may not have a direct access, which may not have a direct one-to-one accounting. It is expected that the cost of capital is 9% per annum. When we say cost of capital, I'm sure you all would have done, you'll be studying SFM. In SFM, you will be quite aware what do we mean by cost of capital. In a layman terms, in a layman language, cost of capital means expectation by the user, the person who is given the funds, how much he is expecting at least return. So if I am lending money to a company, do I expect 5%, 8%, 10%? How will I expect? That is known as cost of capital. And this cost of capital comes from peer benchmarks. Say, for example, if I give money to SBI or ICAI or any bank in India, if they are giving me 7% return, 7%, and you come and ask me that give me money, I'll give you certain percent as a return, how much I'll be asking? More than 7% or less than 7%? Again, it is no brainer. I'm sure we all will agree. I will always ask more than 7% because I'll say minimum I'm getting this in bank and my capital is protected. So my return on investment should be at least higher than I'm putting to you. So this cost of capital company has decided 9%. It could be an average of debt and equity mix or equity mix depending on the company's capital. Depreciation on plant and equipment is considered 15% average on the cost. Now we got some data. Dairy revenue division is 6.8, animal 10 crores, which is the highest. Crop protection 6 lakhs, again, which is the highest. Now, according to you, tell me which division is considered to be the best performing division, according to you. Animal division says we are the best. Our turnover is highest, our revenue is highest, our PBT is highest. So, so they need to have, they need to, they're making this claim and boasting that we are the best. I'll give it time 1 minute to analyze this and tell me and think through, according to you, do you of agree with the claim of animal feed division? Yes, no, maybe. Take 1 minute time to think and let me know your views. So the beauties of the numbers are numbers can be deceptive if you are not able to read them properly. If you have not read the numbers properly, you will always goof up. But if you, not if you should. So once you are a CA student and CA professional, the beauty in our profession is we have to be a good analyst. And once you, and each number is dying to tell a story if you are able to hear it properly. Now, on a prima facie, animal feed can make a division by comparing three revenues. He says, okay, dairy, you're 6.8, I am 10.6, you are 6 crores. So who is the best? So you can say, okay, boss, you are the best. Then animal feed will ask these two divisions. I am making 63 lakhs, you are making 60 lakhs, you are making 57 lakhs. Tell me who is the best? All will say you are the best. Till this part, numbers are true, statement is true. But then it depends on I am comparing with what. This is what matters. Now, comparison is very, very important, and with whom you're doing that is relevant. So I remember when my uncle is a CA, my chacha is a CA. So when I become CA, and I got a rank also at one point of time. So and when I become CA, so I proudly went to my uncle and say, Chacha, you know, I'm blessed to become a CA now. Out of 140 crore people, at the time it was 120 crore. Out of 120 crore people, we are 3 lakh CAs. So how great we are. So a sense of uh, pride came into me at that time that we have become CA, and out of 120 crore population in India, we are 3 lakhs. And then he gave me the life one of the best lessons, and he said, never compare yourself with 120 crore people. All cannot become CA. Everybody will have some profession. Somebody will be a doctor, engineer. Somebody will be a musician. Somebody will be a plumber. Somebody will be a cobbler. Everyone will have a different profession, and each profession is a valid profession. So everything is right based on their circumstances. But then he says, instead of comparing yourself with 120 crore people, just compare yourself that out of the 3 lakh CAs, where do you stand? If you can come in top 100,000, then it is achievement for you. If you, when I say his mains was, then you should be considered the best in your profession. That okay, if somebody need to take advice on this matter, he is that person. He says once you become that expert, because I'm sure in your articleship you would have seen that certain professionals are expert in certain topics which nobody can even match their competence because they've given their time, energy, soul to that. Similarly, when you compare numbers, you need to understand how people manipulate the numbers if you have not understood correctly. Till this part, we all will safely say animal is leading. But now comes the most important part. Now, if I put 5 crore rupees value, and that is plant and machinery, and my current assets involvement is 1 crore, that is 6 crore 79 lakhs, 69 lakhs approx, and I'm getting 60 lakhs. This is roughly around 9% of all. Here I'm making 7 crores and 8, it is 8.9 is 95 crores, and I'm getting 63 lakhs. So 63 lakhs out of 8.95 crores, it is 7% approx. So here it has come down. But now see the interesting point here. By putting 2 crore 62 and 60, that is 3.12 crores, 3.12 crores. I am getting 57 lakhs. Now just make out this maths. How much I am getting by putting 57, by making a profit of 57 lakhs. So I'm making a profit of 57 lakhs by investing 3.12. That is, I'm making a profit of 20% approx each year. Now imagine now here, just by spending 3.12 crores, I'm getting 60 lakhs approx, that is 12%, 18% every year. Here, by putting 10 crores, 9 crores approx, I'm still getting 7%. That is damaging my capital. That is bleeding. How much is my ROI? How much is my ROI? ROI is our 9%. So 9% is the ROI. And how much we are getting? We are not even getting 7%. So can we say now animal is a good division? It is draining your energy. It is depleting your, it is depleting your, it is depleting your, it is depleting your capital. Investors' money is burning out here. So that part we need to understand. Now, so the ROI computation, if we do now, so let us see how much is the ROI computation. That is 60 lakhs, 63, 57 we just saw. Revenue numbers we saw. Head office expenses we need to deduct. So we deduct head office expenses, and then if we compare the profit, because this was already deducted, so I need to add them back to make the real profit. So real profit was 73 lakhs, 85 and 69. Now see the book value, see the amount, 6.7 crore, 8.95 crore and 3.22 crores. And now see the returns made. It made 21%, it made 9.5%, and it made 11%. So prima facie, the animal feed division, which was boasting to be the highest profit and highest revenue, is actually contributing the lowest in the number. So this is an incorrect assumption he would have made if he has only figured these two numbers and not gone into correct ROI. And now the residual income. In terms of 9% is my cost of capital. So if my investment is 6.7, I at least need this much minimum on each, right? So I need at least 9% on 8.95, 9% on 3.22. This is all I need, 9%. Now, after whatever profit I am making, and if I deduct the expected return, what is left? The residual income, which is least, is in coming animal feed division, and the maximum is coming in crop protection division. So again, the first division comes in terms of ROI and RI both is crop protection division, and then dairy division, and the last one is animal feed division. This is the last, and this is how we need to analyze return on investments and residual income. As a shareholder, again remember, any fool, any fool can increase the revenue. Now, when I say any fool can increase the revenue, what does that mean? If revenue becomes the only benchmark to determine who is good, who is the best, as a sales manager, as a sales head, I will just give a discount of 50%, one-on-one free. What do you think? My sales will shoot up? Yes, no, maybe. Think yourself honestly. When you get an offer, buy one, get one free, will you actually, will it impulse you to buy? Yes, no, maybe. Yes, no, maybe. Any thoughts? And that is the reason sales can be increased by anybody just by giving a discount, damaging your P&L. You incur a loss, but you can increase the sales. So that should not be the right benchmark to decide. We should always look into return on investments and residual income to determine whether it is sustainable for shareholders. Do you think higher revenue with a lower return will be sustainable for shareholder, or a reasonable revenue growth with a higher return will be sustainable for shareholders? And this 9.5 with a small decline in revenue, I will be even lower than expected 9%. which will damage the P&L. So that part we always need to look into it. So the manager claim was we are the best. We just talked about ROE was pathetic, residual income was also less, and in all the metrics comparison, crop protection division becomes the number one. So that part we need to always understand how to analyze performance. So after analyzing all, we realize that animal feed ranks both low in all them. So it does not make sense. Highest total profit does not mean it is a good return on investment. You may have the highest total profit, but your highest capital investment is there. So therefore, it impacted your ROI and RI. So profitability alone is not enough. Efficient use of capital is key to superior performance. That thing need to be keep in mind that never make analysis judgment on silos. Look into the bigger picture, look into the overall scenario, then take your own call to decide. Then only we can get the right decisions. Now we'll take a break for 10 minutes here and then we'll resume in at around 8:40, 7:40, and then we'll take on from here from next business secrets. Now we'll take from, so we just discussed about the products, the markets. Now we discuss one of the metrics, which is known as Ansoff metrics. This is used for growing businesses. So if I need to diversify my business or I need to scale up or grow my business, then I need to consider this concept. Now, how to consider this? Now, let's say assume you are a Amul. Let's say you are a, or let's say you are a dairy into dairy farming business. You started producing a huge quantity of milk. Now, what you will do? So there could be two things. First, you may have an existing market, so you might increase your sales in existing market, or you may explore a new market. So let's say, for example, we are selling in Punjab. That is our existing market, but in Punjab we were selling only in respective big cities only. We are going only to Ludhiana, Amritsar, but we are not going to villages. So existing market you can penetrate. New market is, let's say, you now develop to come to Rajasthan or other parts of India. So now you are developing new market. Product is same. That is market development. Another could be you develop a new product. The product is new, but you are selling in existing market. So that's a product development. Another could be you develop a new product and you sell in a new market, which is like diversification. So which is considered the least risky thing? So the least risky proposition, all of them, is selling existing product in existing market. That is market penetration is the least risky thing because here nothing to lose. But the most risky thing is new product selling in a new market. That is a difficult thing. Now, for Ansoff metrics, what is the rule of thumb? When you are into early stage of growth, when you're just growing, then you should go for market penetration. That is, increase your sales in the existing market only. Now, how market penetration can happen? So let's say, for example, Amul or any dairy used to either go at your home and deliver, or they made Amul dairy booths, Saras booth, or similar like booths and put it there and do that. That could be one thing. Second, second could be second could be we so this is a early stage growth. Second could be where my product is stable demand now. Now I can look for new geography. So if I'm sufficient in Punjab, people know me well in Punjab. Now I like to approach new areas nearby Punjab, Haryana, Chandigarh. Then it is market development. Now comes where my brand name is very strong, but now I can innovate and add new products. That would be a product development. Now take for example, I'm selling milk. What could be new products? What could be other products related to milk you can think of where you would like to sell along with the milk process? Any quick thoughts you have on your mind? Like along with milk, I could sell this, that, this. Any quick thoughts in your mind? So the common sense analysis would be, along with milk, can I develop butter, paneer, ghee? Is that possible? Does possibility exist of developing along with milk? Along with milk, can I make curd and sell it? Can I make paneer, mawa, which is used in all or by all caterers? Can I make ghee? Can I make thach? Can I make lassi? We can do that. So these are directly related. You need innovation. Can I make chocolates? Possible. I'm having a, uh, I'm having a regular supply of milk and all. Can I have a, can I have a chocolate business also? You may, but you need to have a strong innovation in that, because in a ghee, butter, curd, paneer, you only need you only need prime product milk, and then some baking things, and then it will be product will be ready. But in chocolate, I need to have cocoa powder and other sugar syrups and chocolate syrups and other things, and then make a chocolate. This will only happen when my brand is very strong. So the classic example is Amul brand. So Amul started with milk, but now, do we have Amul chocolates? Do we have Amul cold drink, Amul coffee, Amul uh, ice creams, Amul sugars? So many products on Amul they have developed on this. Amul Shrikhand, Amul curds, various things are there. Flavored milk of Amul. So their product development happens once you are smart enough to decide where to go, where to sell, what need to market it on the basis of your leverage of brand. I need to go for diversification when my business is declining, then I like to look for new thing. So example of, let's say if my food business is getting down, then I can go for uh, uh, product business. So that is diversification. Now they got a product, they got a demand, they got a product development strategy that we should start selling frozen desserts ice cream. This could be a very good business because we have a lot of milk. The main ingredient to make desserts is milk, and that we have plenty. So if I have that plenty, why not we going to make a desserts? So this is called backward integration or forward integration. So backward integration is, let's say, if I know I need to make ice cream, and to make an ice cream, I have need to have a milk, and I have that milk already with me. So immediately I can just, or if I would be making a ice cream company, I'll acquire the milk taking company so that it could be easily controlled. Now, if you ever been to McDonald's, which I'm sure you have been many of the times, when McDonald's is a brand, why McDonald's is called a brand? When we say McDonald's is a brand, what does that convey? It conveys that whether you eat a burger in a McDonald's in Mumbai, or a McDonald's in Delhi, or a McDonald's in a remote village where we have a McDonald's franchisee outlet, the taste will be same. The fries, the size of the fries will be same. The patties will be same, heated in the same condition. So the experience will be same at all different places. It will be same. That is brand. Now, how come I ensure that the quality remains same at all places? Can it be done by decentralized buying or only by centralized buying? So it is only by centralized buying. Like what does McDonald's does? McDonald's ensures that all potatoes are grown in a specific area only. The mandate is given to grow certain size, certain seeds, certain characteristics, then only those potatoes are taken. That's why they have a long fries, because McDonald's cannot have a small size potato because the fries say size will not come. So these are certain things you need to keep in mind, that if I need to keep quality control, I need to have a decision making with my. So now they decided we want to make desserts, and desserts ingredient is milk. They can control the quality. They have the dairy business. Now this is a new product line they want to develop. So they decided, based on Ansoff metrics, let us take product development, leverage your dairy market presence and infrastructure. Now, how does a new product helps in existing market? Because if I am currently selling milk, I have a supply chain fixed. I have dealers fixed. There are people with whom I have agreed supply chain. So there is no concern to me when it comes to trying to sell new item to vendors, because I have already people who are already buying from me other products. So that scalability does not becomes a question mark. And that's why we need to understand, when we need to develop, we need to see where we fit in soft metrics and then take call. The benefit was, it is a high growth segment. People like ice creams, desserts in all functions, marriages, events, parties. It is one of the product. Especially in summers, the demand is very, very high. Along with my dairy portfolio, it will have it, and it will increase my brand, and customer engagement will be there, because everyone in home will eat ice cream. Somebody may not like to drink milk, especially when you talk to a kid, would you like to drink milk or have ice cream? His first preference will be ice cream. But so milk may not be liked by all customer engaged sectors, but ice cream will be liked by all. So this will have a huge brand increase value. Now, what could be the decision making criteria to start this frozen dessert project? I need to have a plant and equipment of 1.75 crores. Current assets, I need to invest 25 lakhs. So it would be in form of working capital. Working capital could come in form of debtors, inventory, security deposits, and many other things. Contribution is expected to be 95 lakhs. Fixed cost will increase 8.5 lakhs, excluding depreciation. So now, if I make an assessment, how much it will contribute, what is the investments needed, and what is ROI? So if I assume 1.75 crores I need to invest, and then there'll be a depreciation of 15% in first year. So it will be, net investment would be 1.48 crores. At the end, additional current assets are 25 lakhs. So at the year end, additional investment will be 1.73, lying in the books. Contribution I'll be getting, it's 95 lakhs. Additional fixed cost will be 8.5. So my net addition to the earnings would be 60 lakhs. Now, if I compare my ROI, I'm getting 34%. So on the investment of 1.753 crores, I'm getting a return of 60 lakhs. So 34% I'm getting a return. In terms of residual income, I'm expecting 9% of investments. So I'll take 9% of investments, and my expectation is 15 lakhs, whereas I'm getting 60 lakhs. So 44 lakh becomes my residual income. So which is high in all standards. Now, ROI criteria will be the first one to decide whether I should increase or not, expand or not. Now, if we see the dairy division, which has given the highest ROI at that time was 21%, and it is higher more than that division. So if it is higher more than that division, so it will be 11% higher. So 34.68 is the highest overall ROE compared to all other companies, all other divisions. So it makes sense. So it makes sense to get this ROI done, get this investment done, so that there'll be a good return for the company. So that factor need to be kept in mind. Residual income, we already discussed residual income. What will be the residual income? Residual income is coming 44 lakh, which is going to be getting very high residual income by putting this project. Now, they also have, since they are growing, and if you are growing, you need to set your systems right on day one. Otherwise, when you become exponentially grow, you are cannot able to manage it. So we need to get the details. Now they want to get on ERP integration. So why ERP integration is important? If I do not get real-time data for taking decisions, then I will not be able to take right decisions. So the objective was we can optimize procurement, production, logistics, and distribution if we have all data at one place. Scope was to integrate data of dairy, animal feed, crop protections, so proper decision making can take place. It is expected that in 3 months this integration can happen. They appointed a US based consultancy to implement customized software. Right now, practically in India, we generally people go for SAP, Oracle. Nowadays, SAP is most used and seen in the companies, or Odoo, or any other softwares which can be used for getting standardized, customized software, because each business will have its own different nuances. Like for example, in a normal company, you have you don't have livestock. So if I buy 100 cows, in normal companies, you don't have this kind of product. But if I have 100 cow, and then 100 cow gives 10, each cow gives two calves, then it becomes additional 200 cows. So how to account for that? So for each industry, same software may not give the right answer. So so they decided it's time to appoint the person to integrate this software. This will help them in getting control and real-time data visibility. It will help them automation of inventory and logistics, because logistics is also one of the biggest costs in this industry. This will help in reducing operational bottlenecks. Your supply chain will be controlled, which is very important. It will always enhance decision making and performance tracking, which is the key of every department to know the decision making should be right and performance tracking should be there. Now the cost is coming $1 million. The cost of making or the setting up the entire software is $1 million. Payment I need to make after 3 months. That is once the project gets completed. It is expected that my currency will depreciate 4% in INR value. So my CFO has advised me to hedge the foreign risk. I'm sure you all would have gone into FM and would have seen hedging or FX rate. What happens in FX? How it's so difficult and why it is very expensive. If you have not properly hedged it, it can have a huge implication on your P&L. So the current spot rate is coming 85.6 and 85.9, whereas 3 months forward rate is coming 87.6 by and sell, and 87.90. That's the expected numbers. The borrowings in India rate is 8% and USD 5.5, and the deposit rate is 6.5 and 4%. So if I deposit money in USD, I'll get 4% returns, but in India, 6.5. But the borrowing rates in India is expensive and US little expensive. If I take if I take a forward cover, it will come at 87.90. That means I will have to make payment of 8 crore 79 lakhs. But if I try to do a money market hedge, that means I deposit this amount in USD. So the 1 million which I need to pay, I'll get a 4% interest. And then assuming 10% is the cost, I'll get a present value would be 9.9. Because I want to make a payment of 1 million in future. So I should deposit 9.9 today to get 1 million after 3 months. Current spot rate is 85.90. So how much I require in terms of rupees? 8 crore 50 lakhs. If I borrow at 8%, I'll get it the price 8 crore 67 lakhs. Now that call has to be taken because there are various permutation combinations. Now this ERP will help in resolving warehouse and shipping complaints, dispatch timelines, integration with ReachMe network. They have a ReachMe logistic network and it will deliver high ROI and RI performance. This will help a seamless coordination between divisions, data-driven forecasting and inventory planning. If you have correct SAP code, if you have a correct ERP system, it can give you real-time inventory data, how much milk is in storage, how much milk is in pipelines. That will be a very relevant idea. It will help a lot of cost savings and proper resource allocation. Now they are also thinking to take a diversification strategy, that is to own a dairy farm at Dhagwad in Himachal Pradesh. Now the reason to own a dairy farm in Himachal Pradesh was, if I need to maintain integrity of my brand, my product, I need to ensure the raw material comes good. Now to keep good raw material, to keep raw material, I have to keep a quality of raw material. Either I can have my own product, right? Either I can have my own raw material, or I can get it outsourced from someone. So now there are two things can happen. One, say for example, I buy 100 cows, okay? And if I'm buying 100 cows, I'll ensure they all will get a, they all will, I give them proper fodder, proper food, proper animal husbandry, everything, proper veterinary services. So I'll keep 100 cows in a good condition and I'll get a good product, good milk. It may also happen I can try to go for outsource. I may go and agree with some other dairy farm, some other goshala, and I'll say them, okay, I'll give you 1,000 rupees per cow. You give them proper food, proper facilities, and I'll take milk from them at an agreed rate. Is there a possibility that the person whom I'm paying 1,000 may not spend that 1,000 on the cow, spend only 500 on the cow and 500 on his he pickpockets, and quality or the services of the cow may not be given properly. If that happens, will the quality of product degrade? So in a contract manufacturing, it is very difficult to control the quality if the person is not clean and committed. There's a difference between products which are tangible products, like if you're making an iPhone, then it does not impact much. But what if I'm making a edible products, product which anybody is going to eat, and if something goes wrong in that, it has a huge issue. So I decided, shall we go and own have our own kettle? So I have a control on milk quality. I can make a premium product segment. I will say that okay, I am buying a Neil guy, or I can get a Hollywood, US, New Holland Jersey guy, which is the best cow in the world to give a uh, best products. So that can also happen. And if that happens in that scenario, I can have a new business. I'm sure you all would have seen nowadays there is a new trend of business coming in food, in this dairy industry, that organic milk, or organic farming. We have products. Various startups have come like this, where they say we dedicate a cow for you only, so that it will give good regular items for you only. So this is the way how a premium segment works here. And remember, when a development happens in a person life cycle, like when he becomes from lower income group to middle income group, or middle to higher income group, how does the change happens? Change happens in the way he lives. So where you are taking unbranded milk, you start taking branded milk once you become successful. Where you are taking branded milk, then you will take only uh, uh, you will take very high protein type milk, which is a fancy milk, more expensive, to show that, because everybody would like to take the best for his family. And when it comes to food, they will not compromise, and they like to always get the best. So they decided, let us go and buy this also. They wanted to have a high yield milk cows. All will be in-house breeding. They will be daily milking and storing in cold storage, so that milk can sustain longer. Weekly distribution to retail distributors. There will be pure fresh milk, no additives, no processing. So it will be pure healthy. So the land which we'll be getting, we need to purchase a land of 3 crores for having this farm. We will acquire 100 cows. The government will give me subsidy for 10 lakh rupees, which is a non-refundable grant. Now, any idea how should I recognize the grant in my books? So government has given me non-refundable grant. That means I don't need to refund it back. It is for cow acquisition. So shall I amortize it over the expected period of life of cow, or I should recognize it in P&L in first sense? What do you think I should do? Any idea? So there are two kind of grants, where conditional grant or non-conditional grant. Where there is no condition and you don't need to return it at all, and which is related not to acquisition of capital assets. I can put it into P&L straight away. Suppose I've got a grant for buying a plant and machinery, and the government has given me a grant for 10 lakhs for buying a machine of worth 1 crore rupees. So I have two choices. Either I reduce it from the value of the machine, book it at 90 lakhs, or I will book it as a deferred income and amortize over the period of life of plant and machinery. Both the options are right as per India's. The operating expenses to incur this would be 12 lakhs, 5 lakh for breeding. Out of the 100 cows we purchase, 20 calves were born. Now, and no other changes in livestock during the year. Any idea what would be the treatment of this 20 calves born from the 100 cows? Any idea? So I bought 100 cows. Out of that, 20 cows, calves were given from some cows. How should I treat them? Under which standard I need to go and look into it? I need to go and look into India's 41 biological assets. India's 41 will tell how we need to look into the India's 41, which is related to agriculture. This will guide how we need to treat biological assets, government grants, agriculture produce. That part we need to consider. Does this include agriculture land? It is not included. Does it includes bearer plants? It also does not include bearer plants. You'll be glad to know that India's 41 major contribution in IFRS 41 is given by ICAI India. So we have done a lot of standard development and help IFRS into this. Because prima facie, predominantly we are engaged in agriculture a lot. So that's why our standard is given. As of 31st March, they have 10,000 liters milk in cold storage, and which will be shortly sold after year end. Now, the land at Dharwad is Dagwa town. As on 1st April, it is 3 crores. 1st October, 3.1 crores. And year end, 3.15 crores. Milk is on as of 40 rupees, 42, and year end is 45. Now, what is the value of livestock fair value? So, what does India's 41 talks about? Livestock should be always at fair value less cost to sell. So, let's say if a newborn calf fair value is 30,000, as on 5th April, as on 31st March, it becomes 40,000. So, what will happen? Let's say we bought cows at 42,000, let's say, on 1st April. And 31st March, the fair value of the cow is 52. So how much should I recognize in my P&L, my balance sheet? I will book as a gain and put as 52K in my balance sheet. So there'll be a gain that will be recorded on such increment. So in the P&L, there is a gain of fair value of change in cow, fair value of newborn calves, because the newborn calves are 44 for 6-month-old calves, and now we got 20, so 8 lakh 80. The grant receipt is 10 lakhs. The milk which is there, 1 lakh 10,000 liter milk, will be considered at a fair value in income at closing price of 45. And after that, it will be considered as an inventory. And maintenance and breeding fees will be 12 and 5 lakhs. In the balance sheet, they have shown land at 3 crores, dairy cows at 52, calves at 8.8, and milk inventory 4.5. Now, from here onwards, milk will be considered as inventory as per Ind AS 2. Can we fair value the land? What is your view? Does standard allows me to fair value? Any thoughts on this? So the standard allows me to fair value the land. That I can be done. Now they wanted to expand crop division, production division into other parts, Haryana and Uttar Pradesh, so that since these are farmers dominated states, so there will be a huge demand on pesticides and insecticides. The assessment was done and they realized small farmers in rural pockets have this opportunity. Currently, they go with agents, but due to high commission, it has a huge impact. So they decided to go for a rural penetration. But the issue was they don't have any warehouse or shipping infra outside Punjab. ERP system improved ops but does not substitute physical infrastructure. Having an ERP will help you to know how much inventory you have, but it will not help you to ship the inventory. For that, you need to have a truck or warehousing divisions where store can be done. Now, at this point of time, spending into high infra investment is not recommended. Why it is not recommended? Because you are exploring a new market. And in a new market explorer, if for some reason your market does not respond properly to you, then whatever expenditure you've done on fixed assets, infra cost will be a difficult issue. That part need to be kept in mind. So that part has to be kept in mind when we need to look into this part. Now, just to give an idea how to increase sales, how real life things happen. Say, for example, if you order anything on Amazon or Flipkart, assuming the thing is manufactured in Chennai or Bangalore, does it happen that on the same day or next day it gets delivered to your doorsteps? Let's say you're sitting in Delhi or Jaipur, and from any item produced in Chennai comes to your doorsteps in less than 1 day or 2 days. How does this happen? The shopkeeper in Chennai may not have that infrastructure to open a warehouse in your city. That will be huge expensive. So what does it happen? All e-commerce stores, they open the warehouse, and in that warehouse, they allow you to place your product by taking a certain rental charges. So this could be your solution. Instead of putting a high infra investment cost, you can go and get a rental in somewhere other stores. So they decided to have a strategic partnership with ReachMe. ReachMe is a e-commerce digital platform like Amazon, Flipkart, which will connect sellers and rural buyers. It will offer warehousing and shipping for additional fee. Seller fees charged to VN and subscription fees charged to buyer. So whatever when will sell on this portal, they will charge certain fees commission, just like how Zomato, Swiggy charges from the restaurants for whatever sale they make on the platform. It will enable to access new market without upfront infra cost, which is a smart thing anybody can consider. What could be the strategic benefits? You are accessing new markets. Farmers are getting better prices, so they'll be coming to you, and you can integrate your ERP with this ReachMe platform. So you have huge access of data. And in our profession or any profession now, if you have a good access of data, that will be a very good thing to sustain. If you don't have proper data, if you don't have proper data, then you'll not be able to take decisions. Once you have online platform data integrated in your system, you would know the demand cycle, supply cycle, and the product requirement. Now let us take some questions before we go into actual seeing balance sheets and P&L of certain food company, agri companies. The land on which when has its dairy farm operation at Dhagwar is classified as an agricultural land. Which of the following statement you think is true among this? Income from dairy farming can be considered agricultural income and is exempt from tax. Income from dairy farming can be considered agricultural income as like traditional agricultural activity as it is related to agricultural land. Income from dairy farming can be considered business income and is non-agricultural income. Income from dairy farming performed on agricultural land can be apportioned between business income and agricultural income and based on certain predefined ratios. Just like I have a tea plantation income, there is a predefined ratio 60-40. 60 is exempted and 40 is taxable. Now, what is your view with regards to this option, this question? Income from generating from agricultural land for dairy farm operations is exempted, not exempted. Out of these four options, which one you think is right? So it is option C. Income from dairy farming is not considered a business agriculture income. It is a business income. Now let me take one question in this same context. Assuming I have agricultural land. Assuming I am having an agricultural land and I don't want to, I don't want to, I don't want to go for, assuming there is agricultural land and I don't want to go for farming. So I gave this land to my neighbor. I told my neighbor that you do a farming on this land and whatever comes based on that, you go and get a valuation, you go and get a uh, production done, and then you give me a revenue out of it. So what I've told to my neighbor is, I'm giving you an agricultural land, you do farming on it, whatever comes on farming, you sell it in the market, and just give me 1 lakh rupees per month as a rental income for using this land. So this 12 lakh rupees which I am receiving for not by not doing actual farming, somebody else is doing farming. This 12 lakh which I received, is this taxable or not taxable in my hands? What is your view? Any quick thought somebody has on this view? I am receiving 12 lakhs from my neighbor who will doing farming on the land. Whatever agricultural produce he sells, I will not ask anything from it. Just he will give me 12 lakh rupees for farming on this land? Taxable or exempted in my hands? Though the common sense may say that he is not doing any work, he is not doing agriculture, so it should be taxable, like income from house or property. But what does Section 1010 says? What does Section 1010 says? What does Section 10 of income tax says? This will be fully exempted in the hands of landlord. Even though he is not doing any farming, but he is deriving income from the use of agricultural land, and the land is used only for agriculture purpose, so it will be fully exempted in his hands. So in this question, the answer is option C. Now, we want to improve the division's economic value added. Which of the following thing animal feed division should do it? Because now the animal feed division got a warning that you got a very high revenue, high profit, but you are not able to improve the economic value added to the firm. So, which option you think could be the best option out of four? Which option do you think out of four can be considered the best answer? The last option which you read, change the cost of capital to reflect EVA that is favorable. This looks a right answer or it is looks a unethical answer at all. You can never change or tinker on certain fundamental things just to get your number look good. That cannot happen. You can't change the cost of capital just to reflect EVA is favorable. You can't do that. The correct answer is out of these four, option A. If you can improve the operating profit without investing more capital, your EVA will improve. In all other costs, there will be a increase in cost. So EVA will not improve. This option will be the best answer of four. What type of business model does ReachMe follow? Hypermarket, digital platform, freemium, or service ecosystem? Any idea what is freemium model? Freemium models are those models like, for example, do you have Spotify or Ghana.com or YouTube Music in your app? Anyone who likes to listen music, you might be having any of these apps. Either may you listen to YouTube Music or you may go to Spotify, Ghana.com or any other Karwa, Sarigama, whatever you take. Does these apps are free or they follow freemium model? What is freemium model is? Where you give certain services at free and then certain services at a premium level. So that becomes a freemium. So some things you give free. So like for example, today if I want to listen any song on YouTube Music or Spotify or Ghana.com or any other app, it will be free. I can listen. But will that have a lot of ads coming in between after every song? There will be coming. So then they will give me a model. Okay, if you don't want to listen ads, take our subscription, which you'll listen without any advertisement. So that's a premium service. Now it is your choice you want to take it or not. So that's a premium model. So the company knows I will give you 100 free, at least 10 will become a premium. I'll cover my cost. Are they working on this model or the digital platform? Digital platform models are those models. So ReachMe is working on digital platform. These are those models where you don't own an inventory risk. Your job is only to supply, give excess of supplier and buyer platform. You don't take any inventory risk. So it's a digital platform and you earn from both sides. You take commission from the person selling it and you take subscription fees for the person coming up on your platform. Now the payment of ERP activity of $1 million, which was done for a US company, the compliance head, Ms. Nikita, is unsure whether prior RBI approval is needed for remitting $1 million for the consultancy services abroad. What is your advice to Nikita? Is prior approval from RBI needed for remitting foreign exchange? Option A, yes, prior approval is required because amount exceeds permissible limit. Option B, prior RBI is not required because amount is within the permissible limits. Option C, is RBI approval mandatory for all payments to foreign entities, irrespective of amount involved? No, prior approval is not required because companies into agriculture activities. Out of four options, which one you think is the right answer? So first, when you go in exam and MCQ comes in, start going for my elimination method. That out of these four answers, which are totally incorrect for sure. Say for example, FEMA do not say anywhere that if it is agriculture activity, no need of RBI approval is required. So this is irrelevant. Second, RBI approval is not for mandatory for all amount of payments. There is a certain threshold, so it is not needed. Choice lies between A and B. Now, if you are able to recall the the permissible limits, then you will be able to get a right answer. So in this, what is the limit? The limit is if during the year I am transferring up to $10 million on a consultancy services, and for each project the consultancy is not more than $1 million, I don't need to take permission. So you don't need to take a permission for such kind of transfer. So correct answer is option B. Just a second. I think something went wrong with my slides. Just a second. I think for some reason slide is not working. So let me just take another. Just give it a minute. Now, let me take you to one of the websites, one of the annual reports of, let me increase the size a little bit. This is one of the annual reports of, just this is one of the annual reports of a food company, Parag Milk Company, which is into the same business which we are talking. So Parag Milk Foods is a listed company, and let us analyze its balance sheet first to get an idea. The balance sheet is in crores. Now we have property plant 448 crores, capital work in progress, intangibles. Then we have biological assets. So we have cows worth 87 crores. Then we have financial investments. They would have made investments in certain assets that will be there. Now, inventories, they have 577 crore. So that means they have worth milk and milk products related to this amount. Their debtors are 259 crores, trade receivables. So this is a broad balance sheet they have. Asset side. Now, if we take liability side, their equity is Equity is 119 crores. Now, if you see interesting thing, my equity is 119 crores. My last year reserves was 792 crores. Assuming 8 crore approx, assuming 800 crores. This year, my reserves is 900 crores. So almost how much I have earned during this year? That is 100 crores. Now you analyze the impact. I am invested with a capital of 120 crores and I'm making a profit of 100 crores on that capital every year, approximately every year. Does that make sense to do a business in this and increase this business? Certainly yes. You're making, so imagine if you are a shareholder and you know how much you would have put money for investment, at least same amount you are getting return from the business, which is, that means every year your investment is getting doubled. So that is something which one need to understand. Borrowings, they have taken 250 crores. That is, and lease liability, which is almost everyone have it now. The bank's borrowing of 363 crores, normal payable. So this is broad. Now, any idea how much revenue they would be having? Any vague idea? How much revenue you think a milk food company like listed company Parag is having? So it is 3,400 crore approx. So 3,433 crores is the revenue. Now 2,400 crore is the cost of material consumed. That is your various expenses, cost and all. And overall you are making a profit of 118 crores approx, 116 crores approx OCI you are putting into P&L. Now they are having a basic different and diluted EPS different. Any idea what could be the reason for this? The reason could be either they have ESOP outstanding or they would have CCD or CCPS, which they would have a different numbers. That would be the reason for this. Now, let us see their accounting policies. Now, the difference in accounting policies which be coming on the different of accounting policies which will be different from others would be in normal financial reporting, you will not find biological assets. That will not be there. Normally, you will not find this. So this will be interesting to see how the policy of biological assets come. Just to give an idea and how it happens. Now, the biological asset is a living animal or plant. So all cattle stock will come into this. Cattle, sheep, cow, buffalo, all will come to biological assets. It is always measured at initial recognition at fair value less cost to sell. So it is always, this standard is not on cost model. It is always on fair value less cost to sell. Cows are measured. Now see, this is a very interesting point to understand here. Biological assets, that is livestock cows, are measured at fair value less cost to sell with any change to the recognized in P&L, which is sufficient. But the next statement is important. The animals reared from conception calves are classified as immature biological asset. So what they are saying, if we have any calf born, we do not classify as a matured biological asset because I am not able to extract milk from a calf. So it is irrelevant for me. So we will recognize them as immature, immature biological assets. Once they become productive animals, we call it matured biological assets. That way. Now, inventory, say for example, Parag food inventory would be, let's say I would have a curd or a shrikhand or any dairy product. Now, my provision for insolvency, inventory obsolescence will happen based on shelf life of the product. If I have a product whose expiry date is coming in next 1 month, I will have an impact that I need to make a provision based on those expiry dates. That part we need to keep in mind. So this is inventory. Now we'll just see the notes. Just a second. So in property, plant and equipment, you will only get lands and other things. You will not get calves. That will come under biological assets. Now see, how does we impact biological assets? Balance at the beginning of the year, any decrease due to sale or disposal. So let's say last year I have 100 cows. This year, some cows stop giving milk. So either I might sell them. Some cows would have died. So I might have sold them, dead cows out of it. So there is a decrease due to them. And then if there is any increase in the fair value, I will add it here and put it there. Now, how does they account for it? Changes in price as well changes on account of biological transformation. So that means last year I do not recognize them as a matured biological asset, so I have kept it lower value. Now they have biological transformation, so I'll put it there. There have been no new purchase of biological assets. That means during the year, no cows have been purchased. Then refer note 47. We'll refer that note also just to get an idea. Non-current investments. Any investment in any assets which is not your subsidiary, JV or associate will show it as here. Just a second. Just a second. See, remember I told you they must be having a ESOP pool. So they have a ESOP pool. That's why we have a different number in EPS because of that. Just a second. Let me go to EPS and just a second. Let me take you to note number 47 to get an idea on this. Okay. Now they have given a detailed note on biological assets. What they are saying is now you see what they are doing here, which is expected from all. The biological asset comprises of livestock, dairy cows. How they are measured? Fair value less cost to sell, divided between mature and immature. When they are depending on their capacity of milk production, mature. Now, how much cows they have? So 1550 mature, 1963 mature, 327 other cows. Which are those cows which are not able to give milk now, which has been aged cows. So total they have 3840 cows and 1466686. So as they mentioned, last year was 3486. So they do not purchase any cow this year. It is all due to the calves which have been born during the year that would have been converted. Raw milk and all, they don't expect a price to go down, so they kept it same. That's what they do. So the fair value of cows, they take it based on the valuation technique. And what is the valuation technique? So they also tell how are they valuing it. The valuation technique is based on feeding cost, milk yield, discount rate. So how much discount rate they have taken, they have also given the idea that what will happen if I increase or decrease by 1%, the what is the impact on value. That they've also given the sensitivity analysis they've given that. So this is what they have given generally. So this is for sorry, these are Parag milk foods. So just to give you one idea, so just now we just talked about uh, revenue. So their revenue is 3,432 crores. 3,400 crores is the revenue. Any idea what is the revenue of Amul in India? Any vague idea? Any vague idea you can think of? Like if Parag is having 3,400 crores revenue, what would be the revenue of Amul in 2025, March 25 close end? It touched 90,000 crores. 90,000 crores revenue by selling milk or milk products. So that's the kind of business they have done. And it is all organic growth. Born in as a cooperative society in Anand in Gujarat, scaled up to the entire country. And now you go anywhere in part of India, you'll find the products. You go any railway station, any bus stop, any uh, any store, convenience store, you will have this kind of product. So this is something which someone need to understand how the market is scalable, because something which is item to be consumed daily, the market will be there. If you have a quality, if you maintain and consistency in quality, market will establish. Now let me just take you 2 minutes on Index 41. So this Index 41 is generally not used by majority in your audit cycle life, because very rarely, very few firms will have a business of agri-business like this. Not all people, not MNCs have this. So very few companies have it. But if you have this client, few things you need to keep in mind. First, this applies on biological assets. It applies on agriculture produce at the point of harvest. Now, what do you mean by biological assets? It means assets that are live cattle stocks or growing crops. Bearer plant goes into Index 16. Now, what are bearer plants? Bearer plants could be like standing timber tree or tea bushes, rubber trees, palm oil. These all are bearer plants. Now, there's a very interesting thing here. The rubber tree or the palm tree will be covered under Index 16 as a bearer plant. But the rubber or the tea leaves or the palm fruit or the grapes, they will be considered as a biological product and they will cover under Index 41. So imagine how tricky it is, how tricky the accounting standard is. There is a tree and tree has leaves, shrubs and fruits. So the tree part will go under Index 16 and the fruit part will go under Index 41 as a biological produce, agriculture produce. So this is something we need to understand, and this standard is very interesting to read. This is the only standard which do not give an option of cost. It always put everything at fair value from day one. So anything which is coming goes into P&L straight away. Grants depends on specific section. Whenever you buy or sell, you book any unrealized gain, we go and book it. If you have unconditional government grants related to biological assets, it will immediately go to P&L. It is unconditional. But if you have a conditional grant, it will only go when the grants are met. So let's say government has given you a grant saying that I will give you this only when you achieve the certain milestones, then we will go from certain milestones. Because that's the difference between Index 20 and this. So this is broadly I had to share on these when company and this. Anybody has any questions or any point to understand or any point to make based on your understanding of your businesses, please feel free to share. Else, I'll ask Deepak ji to take it over from here. Deepak sir, I'm done with my part. If you can take it.
Thank you, sir. We are privileged today to have CA Sumit sir. Thank you, sir, for this wonderful session and for taking your time for our students. On behalf of everyone here, I would like to sincerely thank you, sir, for taking out time from your busy schedule. We truly appreciate the way you explain the laws, financial reporting in AS 41, as well as strategic issues. Your examples made it clear that real business decisions are not taken in isolation. Sir, your insights have given us clarity and confidence, and we are grateful for your guidance, sir. Thank you so much, sir. Now, students, it's your time to raise your queries. Students, if you have any query, please ask now. Okay. Now I am guiding you about how to prepare the IBS exam for May 2026 attempt. Okay. Students, preparing this IBS paper requires a well-rounded approach, as this exam tests your ability to integrate and apply the concepts in a holistic manner. First, begin your preparation by revising the fundamental concepts from your core subjects like FR, auditing, advanced financial management, and taxation. These provide the technical foundation which is very important for this paper. At the same time, you have to maintain focus on strategic models as well as corporate governance. Strategic models have been given in self-page module set B, and corporate governance I am discussing about self-page module set A, your law paper. Students, it is very important to note that SEBI LODR regulations are very important. If a company is listed, then I am sure you will get question from SEBI LODR. AFM questions can be connected easily with any case study, specifically if a company is having international operations. Then questions from Forex chapter can be easily connected. You can see the question pattern from your previous examination question papers, and at the same time FEMA regulations is also become very relevant here in this case, because the company is having international operations. Therefore, you must be aware the scope of your preparation. Okay. Now it is very important to practice. To clear this examination, conceptual understanding is must. At least you should have basic conceptual understanding. If you have basic conceptual understanding, you can crack this exam in a very easy manner. Why I am saying this? Because if you have good conceptual understanding or basic conceptual understanding, you can easily apply open book resources. Okay, if you don't have conceptual clarity or knowledge, then it is very difficult to apply open book resources also. Therefore, to gain conceptual understanding, I advise you to practice from your case study digest, your modules, revision test papers, mock test papers. Okay, now it is very important to know your timeline. By March end, look out for new case studies in coming RTP. This RTP of IBS covering two very interesting case studies. One case study is based on glassware company, and second is based on mining company. Try to attempt these two case studies independently without any biasness. These might be tricky or lengthy or complex, but we have designed these case studies to prepare you for exam day. Okay, attempt attempt mock test paper 1 in examination condition. This will help you to identify your weak areas, practice time management, and it will be helpful for you to gain confidence, and importantly, use the feedback to improve your score. In April end, just before examination, attempt mock test paper 2, but with equal seriousness. This will fine tune your preparation and your approach, and make you ready for your exam day. Students, IBS is not just solving questions, it is about thinking like a decision maker. Assume you are in role of chartered accountant, auditor, CFO, CEO when solving the case study. Now, normally we do time management in examination on a holistic basis, total time. Okay, but time management for MCQs is equally important. You know, there are 4 case studies. You are required to attempt total how many MCQs? 20. And MCQs are having weightage of 40 marks. Based on my experience, you should not spend 3.5 minutes per MCQ. Okay, it means around 70 minutes. Practice with this approach. Practice MCQs question with timeline of 70 minutes. But some students may take time up to 90 minutes. But try to keep it low. Okay, managing your time in this way ensure that you have sufficient time left for your descriptive portion. It means you may follow a range of 70 minutes to 90 minutes or 3.5 minutes per MCQ to 4.5 minutes per MCQ. But I say try to maintain it at lower level. Okay, try to attempt MCQs in 3.5 minutes. Okay, extra buffer will help you to in your descriptive questions. Okay, time management is very important. Spending too much time on MCQs can compromise the quality of your descriptive answers. Therefore, plan your exam to balance speed and accuracy to maximize your overall score. To achieve this, it is very important to practice MCQ portion under examination condition before the exam. This will help you to develop speed, accuracy, and confidence. Now, students, there is one important thing. This is annual report. Okay, as sir has just shown you Prague company's annual report. Okay, students, studying annual report in this paper is very important because it bridges the gap between theory and real applications. It allows you to translate accounting, finance, taxation, strategic issues into real applications, giving you hand-on experience of actual corporate reporting. By working with real scenarios, real financial statements, real industrial report, real corporate governance report, you gain a deep understanding of practical application. Learning how India's accounting standards shape the presentation of a company's financial health. In a company like Prague Milk, India's 41 is very relevant, very important, as sir has just shown you. Annual reports also offer a window into corporate governance in action. You can observe how board of directors, audit committees, management operate to ensure compliance and maintain transparency and safeguard various stakeholders' interests. In addition, analyzing annual report enable you to evaluate business strategies, KPIs, risk, future plans. This enhances your ability to connect financial performance with strategic objectives. Furthermore, regular engagement with annual reports hone your ability to interpret real disclosures, including financial, operational, and governance related information. In essence, studying annual reports for this paper is very important. Students, any other query? Normally student says I am appearing for group 2. How can I prepare for group 1, especially for IBS exam? Students, it is good question. It's a common concern for students preparing this exam. But I say, even if you are focusing on group 2, at the same time you can select one or two paper from group 1. This is my personal advice. At the same time, and study them in very detail. Okay, for example, FR. A strong grip on FR not only help you to score well, but also prove immensely useful in your professional life after becoming chartered accountant. And FR subject is foundation for every case study after strategic issues. AFM. If you are comfortable with solving practical problems, then you may select this. Go in detail. Auditing. If you have good practical experience, this may be a good choice for you. Audit related insights are often required in case studies dealing with compliance, risk, or control mechanism. Okay. Regarding set A, as I told you earlier, corporate governance is very important. Most case studies involving body corporate. It means they are directly linked with Companies Act. If the companies is listed, then you will surely get question from SEBI LODR. Okay. Regarding set B, this is core for decision making. Focus on understanding of key strategic models like value chain, Porter's 5 forces, McKinsey 7S, Altman's Z score, balanced scorecard, supply chain management, Porter's generic strategies. These models are frequently tested in your questions. Therefore, you should have understanding of these models also. But what about other subjects? For other subjects, you should have basic understanding. When you are making your group 2, select one or two paper from group 1. Okay, then prepare other subject with basic conceptual understanding. Okay, you don't need to study every subject in very deep, but you should have at least basic understanding of all areas. Why? Because during the exam you may be able to identify relevant concept, apply it correctly using your case study understanding and your open book resources. Basic understanding is must because it will help you to use your open book resources. However, students, please note that, however, this is not a substitute for good conceptual understanding. For best result, build your foundation before exam. Don't solely rely on searching or referring material under time pressure. If you have good conceptual understanding, only then you can easily crack the question. Only then you can find appropriate solution from the open book resources. Dear students, it is advisable to carry any material that forms the foundation of your preparation because it is very useful. In addition, any mind map, charts you have created to simplify the concepts of companies that SEBI, LODR, FEMA, corporate governance strategic model, yeah, or Indian accounting standards, or your tax provisions, you can carry. In fact, your own mind map is highly recommended. It means because the best mind map is the one which is prepared by you. When you make it yourself, you remember the flow better and know exactly where to find what during the exam. It helps you to link the concepts quickly and apply them in pressure time. Remember, the focus of this exam is on application and analysis, not just recall. So take only those material that help you to apply what you have already understood. Okay. Now, students, any other query? Okay. Now, students are facing problem in solving case study. Students, tackling a case study effectively requires a proper planning. I can say a proper planning and proper strategy. IBS paper is nothing but it's a mindset. You have to go with proper planning. Okay, only then you can easily crack. To solve the case study, start by reading the case thoroughly. break down the complex scenario into smaller parts. Only then you can easily able to track your requirement part with that particular part. After this, it is essential to apply various standards, various tools, sections, laws, models. For instance, Ind AS 115 may be very relevant for revenue recognition in long-term contracts. Ind AS 116 in lease arrangements or Ind AS 103 in business combination. By critical analyzing the implication of each decision strategically, financially, or in compliance with regulatory norms, and considering alternative approach, you may frame a well-rounded and practical solution. Further, structure your answer logically. But this structure is how you can make proper structure. To make proper structure, you have to do sketch making. When you first start reading case study, first go to requirement part. After analyzing your MCQs or descriptive questions, start reading case study and note down important points. These important points will help you when you draft your final solution. Therefore, I am saying sketch making is very important in every case study. It will help you in controlling the solution in a very well manner. Again, time management is very important in case study. I told you regarding MCQs. Try to finish MCQs in 70 minutes. Upper limit may be up to 90 minutes, but I say around 70 minutes are okay. Okay. Although it's an open book exam, simply having books or modules won't help unless you have already familiar with the contents. That's why I am saying conceptual understanding is very important. Okay. Approach with the mindset of decision maker, not just an answer writer. Okay. A combination of good preparation, time management, analytical thinking will help you to handle the case study very confidently. Now, students, if you have any query, you may ask. Okay. Students, now I am winding up this session. To all the students who joined today, thank you for your participation. Let today's session remind us that IBS is not just about solving case study, it is about holistic thinking, thinking like a decision maker, whether you are dealing with law, tax, your accounting standards. It is about connecting dots. Keep learning, keep exploring, most importantly, keep practicing. To gain success in this paper, you have to change your mindset. Conceptual understanding is must. Wishing you all the best in your preparation. Once again, a big thank you to Sumit sir and to everyone who joined with us today. Thank you. Session over. Good night.